Let's get right to it. The key signal for the Nasdaq 100 tonight is a critical divergence happening in the Korean market. While everyone in the US is waiting on CPI data, the smart money, the real capital flow, has already made its move in Seoul. The trade is done.
Okay, first thing you need to do is ignore the KOSPI's tiny dip of negative 0.28%. That is just surface noise, designed to make you complacent. The real signal, the vector we're tracking, is the negative 1.77% route in the KOSDAQ. Now, why does that matter? Because that's where Korea's high beta growth stocks live, the most sensitive parts of the supply chain. This divergence isn't just a number, it is the entire playbook for what's coming.
And let's put a hard number on this retreat. We're talking about a combined foreign capital outflow of over 1.2 trillion Korean won. Look, this is not a minor portfolio adjustment. This is a coordinated, tactical withdrawal of capital. This is an evacuation. The critical point here is all about timing. This move was preemptive. See, global funds didn't sit around waiting for the US Open. No, they used the deep liquidity of the Asian session to de-risk before the volatility was expected to hit. The trade is already on the books. And you have to understand, this wasn't just some indiscriminate panic selling. No way. This was surgical. The liquidation was laser-focused, hitting two key areas: Samsung Electronics, which is the core node of the entire hardware supply chain, and those high beta growth stocks in the KOSDAQ. It was a precision strike designed to cut risk immediately.
So this goes way beyond just selling financial assets. When you see a bellwether like Samsung being liquidated, it's a vote of no confidence in the whole near-term hardware supply chain. It's a strategic retreat from exposure to physical atoms ahead of a critical digital data point. They're getting out of the way.
So what is this? What are we looking at? The mechanism here has a name. It's called time zone risk budgeting, and it's exactly what it sounds like. To get ready for a high-impact event like the US CPI report, these big global institutions sell their liquid, high-risk assets in Asia first. Why? To free up their risk budget and build a cash buffer for the main event in the US. The process is actually a pretty simple three-step execution. Step 1, you anticipate major volatility coming out of the US session. Step 2, you liquidate your most sensitive assets in an earlier time zone, in this case, the KOSDAQ. And step 3, you hold that cash to secure your risk budget for when the US market opens. Simple, effective, and it's happening right now. How do we know for sure this isn't just a local Korean problem? Well, the validation comes from the currency market. If this was just a Korea-specific issue, the currency impact would be pretty contained. But that's not what we saw. Instead, we saw the equity sell-off happen at the exact same time as the Korean won weekend. And that, my friends, is the classic signature of a global flight to cash. And here's the proof point, 1,444.9. That's the rate the Korean won weakened to against the US dollar. This number confirms that capital isn't just rotating from one sector to another. It's evacuating the entire emerging market system for the perceived safety of US dollar cash. Now, let's quantify this link. The correlation between these KOSDAQ foreign outflows and the pre-market pressure we're seeing on the Nasdaq, well, it's activating with a rho value of 0.85. That is an incredibly strong correlation. This isn't academic theory. It's a direct, high-probability causal chain. The tremor in Seoul is now a confirmed seismic wave, and it's heading straight for the US Open. All right, analysis is complete. Now for the execution plan. Your primary kill switch for the Nasdaq is the 10-year Treasury yield. If that thing breaks above 4.25%, tech valuation models start to fail. That's a red alert. Game over for the bulls, at least for now. Your second kill switch is a technical level, the Nasdaq 100 at 23,858. What's so special about that number? It's the 200-day moving average, a major long-term trend indicator. If we get a decisive break below that line, it confirms the bears are fully in control. So here is your execution playbook, simple and clear. Bull case, if CPI comes in line and the Nasdaq holds that critical support level, you can re-enter the hardware leaders. Bear case, if the index fails to get back above 24,000, you do not buy the dip, you maintain cash. And the failure scenario. If that 10-year yield breaks out, you hedge all of your long exposure immediately, no questions asked. Your watch list for tonight needs to be extremely focused. We're watching Nvidia for hardware leadership, we're watching Micron for the pulse of the memory sector, and we're watching Salesforce as a proxy for high beta software, which, remember, was the first sector to get hit back in Asia. So all of this brings us to the final critical question. Was this massive outflow from Asia just a one-night tactical retreat, or was it the opening shot of a full-scale rout in global tech? Tonight's price action in the US is going to give us the answer. Stay sharp.